into the depths of some of these, what may look very complex, but how should I be able to get easy marks? How should I be able to get easy marks? So in this December 2021 question number 3, they have given us, I'm reading very fast, on 1st July, question 3B. On 1st July 2021, Blanket Limited purchased a debt instrument, 5% bond, with a nominal value of 2.5 million. 2.5 million. 2.5 million. And it's 5% bond. So the first thing we've done is to calculate the coupon interest that we shall be receiving every year. Every year we shall be receiving 125, because coupon interest is always pegged on the percentage. Percentage, I mean, rate of interest pegged on the par value always, not market value, not even your investment that you made. So this gave us 5% times 2.5, it gave us 125,000. And then we went ahead there. The purchase consideration was 2375,000, and the company card 50,000 transaction cost. So then are you able to give me the total investment? Total amount invested. Total amount invested. Total amount invested. Please go ahead and give me the total amount invested. 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 So you see these guys pumped in 2375,000. They pumped in 2375,000. They pumped in 2375,000. And then there was some transaction cost there of 50,000. Of 50,000. There was a transaction cost of 50,000. I must make my board become bigger. Ikiwa itanisumbua sana. All right. So there is somebody who is asking for the question. That is my brother Ken there. Has somebody been able to send the question in the group? Is there somebody who has been able to send the question in the group? Please just send the question. Great sisters, they send the question very fast there in the group, and then you can always call and tell this ninja, this is the question we are doing for everybody to be comfortable. I want everybody to be comfortable. So once you guys are able to get the question, please put your thumbs up like this. Put your thumbs up like this. December 2021, question number 3B. Thank you, Paul. Paul always amazes me. He's a fast ninja, very fast ninja, Paul. A very fast ninja. Now, everybody should be able to really get the question now. Thanks, Nancy Mwati. Nancy Mwati, good ninja, but anakanga jina yake na small letter ya kwanza. Nataka ukiongea kwa meeting ya kazi online. Mtu anaona uli capital M, capital M. It's NM, it's Nancy Mwati. Capital like that. We can't use small letters. Can't use small letters in Zoom. Oh, Paul is the class rep, eh? All right, so now we are comfortable, all of us. We are comfortable, all of us. But what I'll not do, I'll not start doing the question again. I'm sorry for that. You have to excuse me. So, ladies and gentlemen, then, we have been able to know how much in this case here we have invested, because the purchase consideration of the bond. We paid 2375 to acquire the bond, and the company card some 50,000 transaction cost. The bond will be redeemed at a premium of 149,000. So the redemption amount will be the par value plus this premium. Redemption amount will be the par value plus the premium, which gives us 2649,000. 2649,000. And you can see in this case here, it will be redeemed on 1st July 2024. The effective interest rate on the bond is 8%. Blanket Limited's business model is to hold the financial assets to collect the contractual cash flows but also sell the financial assets if investments with a higher returns become available. So this does not meet what you call SPPI test. Solely payments for principal and interest, no. The cash flows in this case here, we have an option of doing what you're selling these bonds in between. If we get a better deal, we can sell. So here we have got three types of cash flows. We'll be getting our principal back. We'll be getting our interest back. We shall be getting, in this case here, profit. Should we sell? Should we sell? So I can see in this case here, fair valuations happening here. All right. So we are told, ladies and gentlemen, that there has not been a significant increase in credit risk since inception. Expected credit losses are immaterial. The fair value of the bond were as follows. The directors of Blanket Limited are unsure of how to account for this financial instrument. Required, prepare extracts of the financial statements for Blanket Limited for the year ended 30th June 2022, 2023, 24 to show the accounting treatment of the above transactions. So by doing this, I'm so sure I'll be able to get a mark. And I can see some other free marks. So after writing this, ladies and gentlemen, can a good student in this case here go ahead and tell me if it was an exam, if this was an exam, what would have you written? 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 Apart from, of course, what I've been able to show you. Ungeandika nini sasa? Usiniambie blank. Iko mwanafunzi angeandika blank. Usiniambie blank oye. Usiniambie blank. Next thing ingekuwa nini sasa? Next thing ingekuwa nini? Thank you so much. I can see a good ninja there. Amortize. Nyinyi mshapita kitu kitambo sana. Because I mean, ladies and gentlemen, you can see here, we shall be getting this money back, this bond. We're getting like annual interests. So in this case here, we need to move very fast and do a loan amortization to be able to know like how much shall we be able to keep this bond at the end of each year. Do a loan amortization. It's not all a loan. It's a loan. So do a loan amortization schedule. Do a loan amortization schedule. You see, you can't miss loan amortization schedule in AFM and AFR. It has always to be there. We must be experts here. We must be experts here. But again, remember, this person is the person who bought the bond. So he gave away money. So it will be financing income, but there is no problem. You don't even have to know whether it is an asset to this person or liability. You don't have to know about that. You go ahead and give us a loan. Just give us a big title here. Give us a loan amortization schedule. Loan amortization schedule, like that. Right time. Right, in this case, ladies and gentlemen, opening balance. Right here, interest and interest paid. The coupon, normally the coupon is what is paid or received. And then we have in this case here, we have here closing. So remember here, you can still use installment. You can still use installment, but you see I'm very categorical. Why? Because this is a redemption loan. A loan where everything will be redeemed at the point of what. So I'll only be getting interest, coupon interest. I'll only be getting the coupons. Just like these government bonds. You take a 20-year bond, the government will come to redeem after 20 years. But in between, I'm going to put interest like that. Abracadabra, thank you very much. So let's, in this case here, talk about then the time, first of all. Give me the years to put here. Abracadabra, there are 3 years. When was this thing bought? It was bought on 1st July 2021. So we have here 1st July 2021. Then we hope that it's July or end of June. So the next one, yeah, I can see it is 30th June. I can see they want me to give them, look at the required, extracts of the financial statements for the Blanket Limited for the years ended 30th June 22. You see now this is very good because we have now 30th June 22, our year. So I'll start here with 22, 2022, 2023, 2024. I don't have to indicate that these are 30th June, no, end of the year, end of the year, end of the year. So then we start with 2020. What was the opening balance here for this loan? What was the opening balance for this loan? Fungua roho yako tuzungumuze. Fungua roho yako tuzungumuze sasa. What was the opening balance for this loan? I'm being told somebody is telling me 20. You know, the total balance will be the amount that was put into this. It cannot be the par value. The amount that was lent here. The amount in this case here in the card plus the transaction cost. The investment amount. So the investment amount is 24, 25. Can you agree we chop those 3 zeros? Someone you like them? Can we chop the 3 zeros? Someone to the capital? We have to chop the 3 zeros. 24, 25. So 3 zeros, chop the 3 zeros. Chop the 3 zeros like that. We chop the 3 zeros. Chop them, yes. Thank you very much. So please, I hope you guys are able to see. Oh, my television wasn't seen, but you guys are okay. Now, I hope you guys are able to see where we got the 24, 25 from. If you read this very well, they are telling us the purchase consideration was 23.75. We paid 23.75, and then of course, in this case here, there was what here, another investment of 15 form of transaction cost. So the whole of this is our investment. Now, this interest, remember the coupon interest, ladies and gentlemen, is 5%. We confuse up a unapata zero in the entire question. So this finance income, we shall always use what we call the effective rate of interest. Whenever you hear of effective rate of interest, that is what we shall use, ladies and gentlemen, to calculate the accrued interest. So like in this question, they have given us the effective rate of interest. Amount GE Luga, there is another bond in the market, a different bond. So you should be able to know there's a different bond in the market selling at 10%, then this bond will move towards that other bond. All right. So in this case, the coupon interest is the interest paid every year to us. But in this case here, how much are we earning out of our investment? It will always be pegged on the effective interest rate, which in this case here has been given to us as 8%. 8%. So then are you able to give me now this amount, ladies and gentlemen, here? Interest and. Thank you very much. I can see guys are following. Juliana tells me 194. Juliana has never disappointed. 194. So then we invested this, we earned this. But remember, these guys gave us something at the end of the year. They gave us how much? Is there somebody who's able to remember that coupon interest? Coupon interest, they gave us what year? 125 years. So this was given to us. So our owing at the end of the year will be this plus this minus this to give us an answer there. What they owe us will be 24, 28, 94. Oh, 24.94. 24.94. This is what they owe us, 24.94. So come and give us here 24.94, 24.94, 8%, 8%. They are not talking to me. 8% gives me 1995.2 or 200. Shiko Mwandeki 200. Remember, the coupon does not dance. The coupon is always the same. The coupon is always the same. So it will be 24.94 plus 200 minus this 125. Minus this 125, which will end up giving us what figure? So then we have a 25 what year? 25, I'm being told here 25, 69. 25, 69. Is that true? 25, 69, right? 25, 69. 25, 69. 25, 69. Then we come here with 25, 69. You can see here we are growing. We can't. No, here they're not giving us back the installment. They're not giving us back the principal. They're only paying interest. So we expect this amount to go on growing. So 25.69, ladies and gentlemen, what is the interest earned here? What is the interest earned here? So they are telling me it is 20 what year? It is 206. It is 206 like that. Then 125 is ever constant, And then you come and give me the closing. So closing will be 26 what year? 2650. 2650. Closing will be 2650. Now, ladies and gentlemen, ikifika hapo wachana hiyo kitu ya fair valuation. Ikifika hapo, what do they want us to do? They wanted us, number one, to give them prepare extracts of the financial statements for Blanket Limited for the year ended 30th June 2022, 2023, blah, 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 blah. So then what I will do here, ladies and gentlemen, I know, of course, I will be able to do my balance sheet very well. But you see now, I can't use these figures here for my balance sheet. Because at the end of the day, our investments, whenever there is a chance, we have to market value them. We have, in this case, throw them to the market and get a market valuation. So this examiner has given us a market valuation here. We have a market valuation, or what we call fair value. Fair value. Fair value. We have a market valuation or a fair value. So at the end of year one, is there somebody who is able to see the fair value? At the end of year one, is there somebody who is able to see the fair value? End of year one, is there anybody who is able to see the fair value? Well, it's given there. There's a table there. There's a table there. The fair value. 2750, isn't it? So here we have 2750. Here we have 2750. You know, this is the figure that will go to the balance sheet. And then, ladies and gentlemen, we have fair value at the end of year two. Fair value at the end of year two, ambao ni ngapi? Fair value at the end of year two, ambao ni ngapi? Oh yeah, I will overcome. 2600, isn't it? 2600. Alafu ni wakora, hawezi kupatia fair value at the end of year three. I'll patia fair value at the end of year three. Who can guess what is the fair value at the end of year three? Remember, year three is the year of redemption. So you know exactly how much will be given. That's the fair value of the asset. This is the year of redemption. Are you able to remember the redemption amount? Was it 2500? No, it said to be redeemed at a premium. It was 2649. Remember, it was to be redeemed at a premium. 2649. 2649. 2649. So then I know what I'm going to take to my balance sheet. These are the figures we'll be taking to the balance sheet. The figures will be taken to the balance sheet. But in this case here, then there is a gain stroke loss, a fair value gain stroke fair value loss. So come and give me gain stroke loss here. Gain stroke loss, which shall take to the income statement. OCI, shall take this to the OCI. Gain or loss. So like here, the closing was 2494, but on fair valuation, we got a higher value. We got a higher value. So I can see a gain of how much? Please take this minus this. A gain of how much? 256. So you can see a gain of 256. So then come to the second one. Second one, it was 2569 a year, but on closing, we can see it was 2600. We gained again. There's a gain there again. There's a gain there. Is there somebody who is able to see a gain? A gain of how much? A gain of 31, isn't it? So we have here a gain of 31, a gain of 31. But when we come here, 2650 and 2649, what do we have here, somebody? Pretty similar. Pretty similar. Pretty similar. It should be a loss, but basically that should have been what here should have been 0. But let's best book it the way it is. A loss of what here? A loss of 1 like that. So what I will do very fast, because they want us to give them an extract income statement, extract income statement, this is what I shall do. Extract income statement, this is what I shall do. It looks crazy, but you can easily understand it. So we have here extract income statement. So we have here the finance income. So finance income, we have our years, 22, 23, 24. At least these will be correct always. Finance income, you can't miss. So finance income, ladies and gentlemen, the first year finance income that I'm able to see there very well is 194. 194. So you have, I'm picking this, 194. We have here 200. Then we have here 20 what here? 206. And then the other fair values will go to what we call other comprehensive incomes. The fair value gains or losses. So in this case, you come and give us OCI. So we have here OCI. So in the OCI, ladies and gentlemen, you'll be able to come and book your gain. So we have gain on financial assets. Gain on financial asset, which I can see there are two of them. We have here, first gain is 256. 256 year one. And then we have year two, the gain is 31. And then we have in this case here, loss on financial asset, which in this case here gives us what here? Gives us 1 year, or -1, call it -1. Or better still, you can talk of gain into bracket here, loss, to have everything here. So gain or loss, gain stroke loss on financial asset, to have everything like that. That's extracted income statement. Then we have extracted balance sheet. So extracted balance sheet. So we have our 3 years, 22, 23, 24. So we have in this case here, our investment. Remember, we took this as an investment. Financial asset or financial instrument. So we have the fair values, market values here. We have them. So we have 2750, we have 2600, we have 26 what here, 49, which if you wish, now you can go ahead to break this down into current and non-current. But even if you leave it there, to me, that is good enough. So of course, you will not be able to get this thing up to this level. But what are the low-hanging marks in this question? What are the low-hanging marks in this question? What are the low-hanging marks in this question? You may not be able to get everything, but what are the low-hanging marks in this question? Yes, like now that coupon rate, like the entire amortization scale, don't let me down there. The entire amortization scale, don't let me down there, please. Please, don't let me down there. All right. Don't let me down there, because that has to be there, either from the leasing or from the pension thing, or from this, it has to be there in your exam. And if you miss out on that investment amount, then you get 0 in the entire question. A good question there. How do we identify whether it's a finance cost or finance income? Remember, like now this particular gentleman, he bought a bond. So you buy a bond, what does it mean? You've given out your money, you have loaned. So you'll be getting an income. It's like the lessor, you'll be getting an income. If, for example, you're the one who issued the bonds, then you got someone's money, so it becomes a liability. So it will be a finance what here? Finance cost. But even if you confuse, trust you me, such questions, not many students will be able to get this right. Not many students will be able to get this right. But while I'm understanding that question needs like 10 minutes. But you see here, my students, good comment there. My students, in this case, I believe you'll be able to forget the fair valuation, but you'll be able to get that amortization schedule. You'll be able to do like an income statement giving me the finance cost. You can even write both finance cost or income if you're confusing. At least that you should be able to get. Mali tutakusanya kidogo ni kwa balance sheet, na hapo ni kila mtu Mkenya, not unless ni genius. Na hakuna geniuses in this world. Kila Mkenya anaanguka hiyo kitu kwa extract balance sheet. Tunaachana nayo. You see, for those students who have ever tried like this paper before, you will bear witness with me. Most of the times you guys go to an exam, such questions you guys are not able to interpret them at all. So if you have an idea of how to interpret and write a few things here and there, in these short questions, then you are good to go. You are good to go. Now, from ladies and gentlemen, you will allow me to take you back a little bit again to impairment. Impairment. I'm so sure there must be some ninja who is telling me that Mwalimu impairment, that will not come. No, I'm the one who is on the steering wheel. Allow me to control the bus. So allow Mwalimu here to take you back to impairment. I know why. Allow mwalimu take you back to impairment. There are basically 3 standards ambazo lazima tuimbe sana. Lazima tuimbe sana EPS, lazima tuimbe sana impairment. So for those of you who have got this revision kit, BPP, I know you have the BPP revision kit. It's question number 22. Question number 22. Telepath. Telepath. Cash flow lazima tujue sana Nancy, yes. Cash flow lazima tujue sana. Finance ni kama unajua maneno. Control F. And ladies and gentlemen, hii maswali ya ACC inarudiwa. Examiner naipenda, kama naipenda sana. So we are doing this question number 22, the telepath question. The telepath question. Telepath question. I may not be able to share the whole of it on my screen, but I believe you guys have this book. I want you to go to page number 24. Page number 24, question number 22B. Please, you can share this book. Somebody who has this book on your WhatsApp groups, so that you can get to attempt B Roman 1. B Roman 1. Telepath. It's a question called the telepath. 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 It's BPP F7. I've given you this book. I gave you the book when I was doing a question called pedantic. Pedantic. When I was doing a question called pedantic a group consolidation, that's when I gave you the book. If you don't have it, again, I'll share. The question will lead you. Thank you very much, Nina. That must be a short name for Penina. Penina. So do we have the book? Do we have the book? Do we have the book? Is there a good ninja who can share that book with us? That noise which is coming from outside, of course, I can't control. Somebody is trying to build something near home. That one, you must live with it. But I hope it's not very bad. There are ninjas here, even if you wanted to help them, they cannot be helped because they're not serious. Then they want you to do other things. When you want to tell them, let's go this way, the river flows this way, they don't want to hear. Wait, they're not even answering whether they have this question or they don't have it. Paul, the class representative, do you have this book? Thank you so much. How comes Nancy and now? Ebu share between yourselves very fast. Or share in both groups. Share kwa SPR, share kwa hiyo ingine, ndio tuweze kuzungumza jambo moja ama jambo nyingine. Iko, thank you very much, Vero. Chalo, great lady here. I hope umacha kupanic, Vero. Staki upanic. If you panic as my daughter, that would be the worst thing ever. So, ladies and gentlemen, for this speed, I want you to move with speed and give me the answer to this. I see how you're going to interpret this. You are told telepath acquired an item of plant at 800,000 on 1st April 2020. That is used to produce and package pharmaceutical pills. The plant had estimated residual value of 50,000 and an estimated life of 5 years, neither of which has changed. Telepath uses straight line depreciation. On 31st March 2022, Telepath was informed by a major customer who buys products produced by the plant that it would no longer be placing orders with Telepath. Even before this information was known, Telepath had been having difficulty finding work for this plant. It now estimates that the net cash inflows and from the plant for the next 3 years will be, so we have those. All right. So then on 31st March 20x5, the plant is still expected to be sold for its estimated realizable value. Telepath has confirmed that there is no market in which to sell the plant as of that date. Telepath's cost of capital is 10% of the following value should be used there. I don't want you to look at part 2. I just want us to do part 1. And for part 1, this is what they want us to do for part 1. They require calculate the amounts of the assets in 1 and 2 above as at 31st March 20x2 after applying any impairment losses. Calculations should be in whole numbers, nearest thousands. So I want to give you guys exactly 10 minutes, and I'm not sharing this question, exactly 10 minutes to see how you would have interpreted Roman 1 of this question. Exactly 10 minutes to see how you would have interpreted Roman 1. So I'll come back at exactly 3:01. So Paul, you are taking charge. If somebody says they don't have the book, you should be able to attach it here, Paul. The only thing you can't do is if somebody says they don't understand, tell them you cannot handle that. Everybody is now fighting for their lives here. We must be able to know how to interpret questions. So exactly 10 minutes are over. Is there any ninja who has been able to get it right? Is there any ninja who has been able? I like what I can see Nina saying there. At least Nina has been able to get depreciation. So is there somebody who was able to get like impairment loss for that asset? Impairment loss for that asset? Please don't cheat anybody. Don't go to the solution at the back, no. Don't go to the solution at the back, no. You're just trying to punish our memories a little bit. Knock them down a little bit so that they can remember. Oh, Lizzie, 208.9. 208.9. Okay, let's again be very honest with each other. Is there somebody who has not been able to write anything in that question? Anybody who has not been able to write anything? Let's be very honest. Fortunately, we have mature students. When it's Gumbaro, any answer you give is always what you're correct, is always correct. Is there any ninja who has not been able to write anything? Oh, there are many ninjas. There are many ninjas. There are many ninjas here. So let's do it together. Let's do it together. Imagine this question is not a tough question. This is a very, very easy question. So long as I remember the concept of impairment loss. So impairment loss, remember that impairment loss equals CAR minus RA. Carrying amount minus recoverable amount. CAR is the same as net book value. Net book value. So by the time in this case here they are doing an impairment review, how many years had lapsed? Let's read this. Let's read this. So Telepath acquired an item of plant at 800,000 on 1st April X0 that is used to produce and package pharmaceutical pills. The plant had an estimated residual value of 550,000 and an estimated life of 5 years, neither of which has changed. Telepath uses straight line depreciation on 31st March X2. 31st March X2. So we have here from 1st April 00 to 31st March X2. When they are doing this impairment review, on 31st March 02, Telepath was informed by a major customer who buys products produced by the plant that would no longer be placing orders with Telepath. Even before this information was known, Telepath had been having difficulty finding work for this plant. Remember, ladies and gentlemen, one of the indicators of impairment is when your property, plant, and equipment items lack what to do. When in this case you have assets lying down there idle, then automatically the asset is impaired. Even ourselves, the moment you do not have what to do, ladies and gentlemen, then automatically you are impaired. Impairment doesn't come with age. Impairment basically comes with idleness. Whenever you're idle, you straight away know that you are what here? You are impaired. Your value always goes down. Your value always goes down. So in this case, there is a necessity for us to do what we call an impairment review, as at this date when this customer has told us, hey, we shall not be giving you any orders. So the machine will lie idle. So then how many years are we looking at here? So we have here 1st April 01, that's year 1. 1st April 02, which is the same as 31st March 02. So 2 years. 2 years. So they give me depreciation first of all by year. So depreciation per year, straight line, I will take 800 minus the scrap value divided by the useful life, which is 5. 800 minus 50 divided by 5 gives me what here, somebody? This gives me 150 per year. So total cumulative depreciation. Total cumulative depreciation will be 150 times 2, which gives me 300. Hiyo nilipata. Unaona mwanafunzi anasema nilipata. And therefore, the carrying amount, which is the cost minus cumulative depreciation, 300. So the carrying amount is what there, somebody? 500. So is there somebody who was able to get at least this part? Is there somebody who was able to get this part? CA now nilipata. Thank you very much, Morgan. Thank you very much, Morgan. CA nayo mwalimu, kingara nayo. Imagine hata wengine ya ra, recoverable amount haita kushinda, utapata. Recoverable amount utapata. So please allow me to rub this. Allow me to rub this. Recoverable amount, hata ina norma. Hata ina norma. Recoverable amount, haina norma. So we are going to consider two things here. We have here what we call recoverable amount. We always look at two items. We have the value in use, and then we have what we call the net selling price or net realizable value. The examiner can use any terminology. So value in use, this is where we discount whichever cash flow is given. Discount cash flows given. Discount cash flows given. Discount cash flows given. Discount cash flows given. So what have they told us really here? What these ninjas have told us is that you can see here, Telepath had been having difficulty finding work for this plant. It now estimates that the net cash inflows and from this plant for the next 3 years. You can see they are here. 220, 180, 170. Remember, 2 years already are extinguished. We are looking at years ahead of us, and then we discount those cash flows. So the question is, have they given me the cost of capital? Cost of capital is what is 10%. And they have even given me this. Of course, this is SCCA, they give you. Cash never times they give us. But as we are ninjas, we even don't want them to give us these figures. We are ninjas, we're used to hard life. We're used to hard life. So what I'll do, if I'm the 1 year discounting, I'll come and write for the examiner big capital letters, time. So time we have here 1, 2, 3. There are 3 years ahead of us. Then I can see cash flows. So I can see cash flows. So cash flows, what do we have here? 220. Then we have 180. Then we have 170 like that. So I'll be able to come here and write for my examiner PV at 10%. So do we use the figures given here or do we calculate ourselves? What do you think would be the better thing to do? I think for simplicity purposes, let's just adopt the figures given by the examiner. They're here, 0.91, 0.83, 0.75. So 0.91, 0.83, and then we have 0.75. So then move forward and give me the present values. Move forward and give me the present values. So is there somebody who is able to give me these present values pretty first? Yeah, let's use value given, yes. Let's use value given first. So present values, like Juliana, gives me 200 here. Juliana, 149 there, 149 there, 149 there. And then we have 100 what here? 28. So this is the total present value here. So total present value, wakikwambia upeana to the nearest thousands, usiandike za madesimo ye. Usiandike za madesimo. Wewe usome hiyo kitu wamekwambia hapo to the nearest thousands. Ni whole number basically. Whole number. Usiandike madesimo hapo wewe. Thank you so much, Nancy. So all of us 477. I know. There is the last year. Yes, the last year we expect. Sorry for that. The last year, it's good. We have good ninjas. There is a scrap value. Do you remember the scrap value? Do you remember the scrap value? Do you remember the scrap value of how much? 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 50. This scrap value of 50 will come to us at the end of the 5 years useful life. So we expect this amount to come back here. Sorry for that. So ongeza hapa OE plus 50 is a cash inflow. Here, year 3, we shall enjoy 2 cash flows. We shall have the cash flows from doing business, and we shall have the scrap. Please, this figure is wrong. This figure is wrong here. So 170 plus 50 is 230. So 230 times 0.75 gives me what figure, somebody here? 230 times. So Paul gives me a figure of 165. 165. So then are you able to give me the true figure here? Please remember, I was also almost forgetting this. Whenever there is a scrap value, you're going to sell an asset. That scrap value will be taken in as a cash inflow. You'll be getting money there. So go ahead and give me the total present value. So according to Ross M, 514, like this. 514. Is there anybody by any chance who was able to get this 514 by any chance? And you never looked at the answer. If you look at the answer, don't talk to me. If you look at the answer, don't talk to me. Don't talk to me. Okay, then you must be great geniuses. You must be great students here. Thank you so much. Thank you so much. So let's come now to the recoverable amount. So recoverable amount. So recoverable amount. What do we have here under recoverable amount? So recoverable amount, we are comparing two things. We have value in use, and then we have, ladies and gentlemen, the net selling price. So value in use is 514, and the net selling price, should they sell this machine, how much in this case here will they be able to get? Lucianne is asking, how about the cash flow for year 1? Remember, by the time you're doing this impairment review, year 1 and year 2, they're historical. And in financial management, you normally talk of what is ahead of us. So year 1 and year 2 already gone. Now we are looking at year 3, year 4, and year 5. Because now we are already at the end of year 2. So year 3 becomes our first year, second year, like that. Those first 2 years are historical. All right. Then come and read something to do with the net selling price. Somebody is telling me it's 0. So net selling price, we are told here, the net selling price, we are told here the net selling price. On 31st March X5, the plant is still expected to be sold for its estimated realizable value, which is 50. Telepath has confirmed that there is no market in which to sell. We expected to sell, but now we have confirmed that there is no market to sell that thing. No market to sell that thing. So in this case here, the net realizable value out of this at the end of the day becomes what here? Becomes 0. There's no market. Even that 50, you can't get it now. You can't get it. All right. So then, of course, we know that recoverable value is the higher of the two. Therefore, recoverable value equals what here, somebody? 540. Recoverable value is always the higher of the two. You compare. Where are we better off? Do we continue using the asset? Should we sell the asset? No market. So you always choose the better outcome, which is 514. And therefore, impairment loss. Therefore, impairment loss equals car minus RAR. What was the car? Is there someone who can remind Mwalimu what car was? What was the car? What was the carrying amount? Carrying amount was 500, isn't it? 500. And you can see in this case here, we can still recover more. We can recover more. So therefore, the impairment loss equals whoever ninja. Impairment loss is a negative. Equal negative impairment loss in that case here is 0 because the impairment loss occurs whenever the carrying amount is higher. Whenever the carrying amount is more, you're carrying an asset at a higher value, but the recoverable amount is what is less? Is less. The recoverable amount is less. So in that case here, the impairment loss is 0. The impairment loss there is 0. And I'm so sure you guys, I mean, you must have gotten this entire question by yourselves without my help. That one I'm 100% sure. That one I'm 100% sure. So the answer is here for part 1. The answer is here. You can see what they did. They're distributing those 7 marks there. You can see here we have a balance of 500,000 carrying amount. You can see how they are discounting and they are adding that 50 there to get 514. And then on impairment loss, they say as this is greater than the carrying amount, the plant is not impaired and will be left at its carrying amount, which is 500,000 in the books of accounts. So abracadabra. Let's get to telepathy here. Enter, telepath again. We are yes. We love telepath. For those of you who are very good in English, we might talk of telepathy, telepathy of hearts. Telepathy of hearts. Have you ever heard of that English? Telepathy of hearts. If you ask your son or your daughter who watches cartoons a lot, they know the meaning of that. Cartoons are very good. So now we are doing Roman 2. Roman 2 is about cash generating unit. Roman 2 is about cash generating unit. Telepath owned 100% subsidiary Tilda that is treated as a cash generating unit. On 31st March X2, there was an industrial accident, a gas explosion, that caused damage to some of Tilda's plant. The assets of Tilda immediately before the accident were, so the old carrying amounts were like that. As a result of the accident, the recoverable amount of Tilda is 6,700. You can see the original was 12,000. Now recoverable amount is 60. So this examiner has given us a recoverable amount. So the first thing that will help you is that we shall be able to calculate the impairment loss, which will be the carrying amount, which is 12,000 minus recoverable amount, which is 700. The explosion destroyed to the point of no further use an item of plant that had a carrying amount of 500. Tilda has an open offer from a competitor of $1,000. I'm cutting 3 zeros for its patent. The receivables and the cash are already stated at their fair values, less cost to sell, net realizable values. So required, calculate the carrying amounts of the assets in 1 and 2 above at 31st March X2. After applying any impairment loss, calculation should be to the nearest thousands, and this has really very many marks there. Very many marks there. So I don't know whether I should do this question right away or do I give you like 10 minutes again, you try. It's very easy. Yeah, Luciana is saying just do it. Do it right away. Do it right away. How I wish, thank you very much. How I wish I will be there on that material exam day to do it for you right away. Now, because I won't be there, I have to give you 10 minutes. You try the question. Should you not get it really, then I should be able to do it just to harden you. This is a hardening process. And it's an approach I'm taking from today till we do an exam, giving you 10 minutes to try, and then we see within 10 minutes how many marks can you squeeze. Bad approach, good approach. Bad approach or good approach. So I'll come back, ladies and gentlemen, at 3:28. I lost the date. So Ninja, this is the question we are doing. It's on page number 24. Page number 24, actually 25. Page number 25, this one here, of telepathy. Telepathy, and has got tilde in it. So I'm giving exactly 10 minutes. Let's see how many marks will you squeeze out of this question. Out in 10 minutes, how many marks will you be able to squeeze? Don't tell me that I'll squeeze a squirrel, which runs away. Nothing. 0 is a squirrel. Telepath. All right, so 10 minutes are over. 10 minutes are over. How many marks have you been able to squeeze? Let's mark for ourselves. Let's mark for ourselves. How many marks have we been able to squeeze? Nancy, sorry, I'm squeeze. But Nancy squeeze swali. That was the best. We shall overcome. So 2, 4, I mean 4 is very good. That's very good. Because now, so ladies and gentlemen, me then to go through it slowly, but I hope everybody was able to at least try squeezing their mind. I hope everybody was able to, put themselves in an uncomfortable situation to do the question, And at least that one, Yvonne has done that. At least Yvonne has been able to do that. Writing off of goodwill and the patterns there. All right. So then, ladies and gentlemen, we shall overcome. The first thing that we shall do is to come and calculate what we call the impairment loss, which is CAR minus RAR. Remember, this is a cash generating unit which has got many assets within there, right? So carrying amount will be for the entire. So 12,000 minus recoverable amount, which is 6,000 what year? 700. So what is the impairment loss? At least we got a mark. At least we got a mark. So the impairment loss in this case here is the impairment loss. Abracadabra, total of account 5,300. Now from there we come and do a list of our assets. We do a list of our assets. We do a list of what year our assets. So this is how our assets will look today. Very easy. Very easy. Hata kama ni daktari anakudunga shindano, unle daktari mwenye akona mkono mzuri, hata sina yake sio uchungu. Very easy question. Good examiner. Goodwill. We have patent. We have in this case here, factory building. Then for plant, we must subdivide the plant into 2. We have in this case here the already damaged plant. We must subdivide that into 2. Damaged plant, and then we have what we call others. And I taught you how to do this. We have others, other plant. So we have damaged plant and other, and then we have receivables and the cash. Receivables and the cash. Receivables and the cash. So we have here original carrying amounts. Original carrying amounts. So goodwill, original carrying amount, are you able to see the figure? Hapo nimepata, great. So in this case here, goodwill, are we able to see the figure here, 1,800? Patent, I can see a figure of 1,200. And then building, I can see a figure of factory building 4,000. And then we go to the note where they are talking about the plant. The explosion destroyed to the point of no further use an item of plant that had a carrying amount of 500. That is a damaged plant. So damaged plant, 500. And because the total plant was 3,500, it means that the other plants are worth 3,000. Because the 2 of them must add up to 3,500. 3,500. All right. All right. So plant 3,500. I've been able to apportion this to damaged, and the other plant, which will be 3,000. And then we have receivables and the cash, 1,500. Receivables and the cash, 1,500. And then in between we have impairment loss. You guys give me a total impairment loss of 5,700. And then we have new carrying amounts. New carrying amount of 6,700. No, I think I've mixed up things. Carrying amount ni ngapi? 5,300. Wamesema impairment loss is 5,300. 5,300. So then, gentlemen, what we shall do, these guys have given us a few things. For example, they have given us new carrying amounts. I always begin it like this. They have given me new carrying amounts of some assets. So new carrying amounts of some assets, for example, receivables and cash, no impairment. It will remain the same. Receivables and cash. I know the new carrying amount, no impairment. Receivables and cash. Goodwill dead, I like that. I like that. So you can see here, receivables and cash. Receivables and the cash are already stated at their fair values, less cost to sell, net realizable values. Listen to me very well. Whenever you see cash anywhere, cash is never impaired. Cash is never impaired. Cash, we shall always take the old carrying amount with the same as what the new carrying amount. They are fairly stated here. Fairly stated. And then, ladies and gentlemen, from there, what else? The patent, yes. They have told me about patent. They have told me about patent. They have told me about patent. But for patent, I have a ninja who is willing to buy this patent. The fair value is given. For the patent, I've been given an offer. Till there's an open offer from a competitor of $1,000, because I'm cutting 3 zeros. $1,000 for its patent. So then I know that the carrying amount there will be what here? 1,000. 1,000 for the patent. Carrying amount is 1,000. So meaning that the impairment loss here for the patent will be 200. It is worth 1,200. It was worth 1,200, but now it's worth 1,000. So you have lost 200. Receivables on the cash, 1,500, no impairment loss. There's an impairment loss which has been given for this damaged plant. What do you think about the damaged plant impairment loss? How much do I take the impairment loss, damaged plant? How much? If it's damaged, the whole is impaired. The whole is impaired. So 500 here. So meaning that the carrying amount of this is 0, like that. And then, ladies and gentlemen, those are the ones that have been specifically given. So I'm so sure, like now damaged, rather goodwill is already now damaged in full. Because you can't tell me that a CGU has been impaired and it has got any goodwill. Your goodwill came Goodwill. So in this case, ladies and gentlemen, goodwill, the entire amount is impaired, the 1,800, so 0 there. So do we have any amount which now is unallotted? What is this unallotted amount or unallocated amount? Unallocated impairment loss. What is this unallocated impairment loss? So unallocated impairment loss. Unallocated impairment loss. Unallocated impairment loss will be 5,300 minus whatever you have here. 1,800 minus 200 minus 500, which will end up giving me what figure, ladies and gentlemen, as an allocated impairment loss? They're giving you 2,800, isn't it? 2,800, right? 2,800. Chasang has confirmed 2,800. So it is this 2,800 that now we shall allocate, we shall apportion to what? It is this 2,800 that we shall apportion to the building, other plant, actually 2 of them only. So allocate the 2,800 to the buildings and the other plant. So allocate to buildings and the other plant. Apportion, use the word apportion. Apportion to buildings and the other plant. So building, how much? Are you aware of the carrying value of building? You use carrying values. So carrying value of building is 4,000. and the carrying value of other plant. And this question was tested exactly the way it is in your custom exams. Exactly. So other plant is 3,000. So giving me how much in total? Giving me 7,000. Therefore, impairment loss will be 4,000 divided by 7,000 times 2,800. 3,000 over 7,000 times 2,800. So is there somebody who is able to give me these impairment losses? Is there anybody who is able to give me those impairment losses? Anybody who is able to give me impairment loss of building? 1,600, right? 16. So for building, 1,600. For building, 1,600. And then other plant, 1,200. So please go ahead and jaza hizi zingine zote sasa. Jaza zingine zote sasa woye. Kwa mfano woye. Hapa kwa building itakuwa 4,000 minus 1,600, which gives us 2,400. All right. And the other plant, it will be 3,000 minus 1,200, which gives me 1,800. Kwisha maneno. Kwisha maneno. Nothing again. Nothing. Nothing more, nothing less. Where is the 7K coming from? Here. You see, building has 4,000. Other plant has 3,000. When you add, because we are allocating this 2,800 to the two only, building and other. And the building here has got 4,000 carrying amount. Building carrying amount is 4,000. And then other plant 3,000. When you add the two, you get 7,000. You get 7,000. Bekilizi anasema mwalimu not Bekilizi, Motabori, mwalimu nilipata hii for the first time. Motivate me na M-Pesa. Motabori, weka namba hapo basi. Weka namba hapo basi. Ukiona Ninja anasema namna hiyo, hata weka namba hapo. All right. So I believe now that is okay. This Motabori guy, 353 910. You have your 400 bond. That's very good. That's very good. Tobias. That's very good. Luciana anauliza swali mzuri sana. Ili ufanye mtu akiwa peke yake achanganyikiwa. And that's why I want you guys to attend all my classes, the low-hanging fruits from tomorrow. Because it'll be like, do this in 10 minutes, we do it together. Do this in 10 minutes, and trust you me. Like the students who are saying, mwalimu enda tu hide fanya. Kwani tangu semester yanze, simini nilikuwa nikifanya peke yangu. Na nikupatia question na kushinda. So the very best thing is for us to have the students first of all trying it, and then mwalimu does it. That's how we will be able to kill this thing once and for all. Once and for all. Yeah, very good, Sylvia. Mpomo ni kujiongelea, nimeisha hivyo. Hiyo imeisha hivyo. Thank you very much. Thank you very much. Well received, great. Sasa tumejua. Yeah, great. Oh, Ninja, I will give you just one link. We shall not be sending this. Sending of links is also not very, very easy. In good faith, I'll provide you one link that we shall be using to join all our daytime classes. That one link which is current. But But don't share. You know why we keep on changing the links is because some of us share those links. Don't share that link. We share that link and then we lose income. International disaster. Those students in this case here come and build RCM. Thank you very much. Now, ladies and gentlemen, I have another question for you. Wakileta hii wewe bado kubaliane. Wakileta hii utashindwa kuileta ku discount peke yake uoye. Wakileta sorry. Hiyo kitu ya kupata view ya kudiscuss. Utaweza hata hiyo jameni. Utaweza. Utaweza wewe. Ama kwa kile carrying amount. Hiyo utapita. Sasa walete. Aya. Sasa in the next 10 minutes, of course, that will mean I've learned a lot today. Kumbe, this is the approach that we should have adopted. From the word go, this is the approach we should have. Like in ways, okay, adopt. So as I go to something different, please, I'm 100% sure that if you go to your workplace tomorrow and tell your employer that I've got these exams coming along, akupatia just 1 week out of your annual leave days. Atakupatia. Not unless in the boss, karibu nisema sura mbaya. Not unless in the boss ambayo akona roho mbaya. Because this is personal development, really. It's personal development. Unamwambia, have these exams, please give me like 2 hours. Wakati wa FR tu, unajificha. Anakubali, alafu na extend, maybe you should be able to make a rate. You know, it's all about communication. How do you talk with your bosses here? Yes, how do we talk with our bosses? Also, it really matters. But again, unfortunately, you will get like some of us, we have already cheated our employers that we finish CPA. You know, that's again a big problem I normally get with my students. They tell the employers that they are CPA Ks. We shall overcome. Hata umejaribu sana. Sababu wengine unaweza kudanganya employer umaliza CPK wakiwa section 1. Unaweza kuambia employer zile CPK. Hata umejaribu sana. Umepanda sana. We shall overcome. So this question number 35, Pandara. Question number 35, Pandar. It's a question that has got a share exchange. Pandar purchased 80% of the equity shares in Salva. The acquisition was through a share exchange of 3 shares in Pandar for every 5 shares in Salva. The market price of Pandar and the Salva shares as at that date is like that. So we have revenues, blah, 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 and then blah, 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 blah. So they are giving us a lot of blah, 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 blah there. So they want us to calculate the goodwill arising, calculate the carrying amount of investment in the associate. B, prepare consolidated statement of profit or loss for the Pandar Group for the year ended 30th September 2019. So, ladies and gentlemen, I would want to give you exactly 37 minutes. 37 minutes. And then I get to see how far you will get with this question. 37 minutes from now. 37 minutes from now. It's on page number 5. Question number 35. Question number 35. They want you to do 3 things. This Pandar. You can search for the question by the name Pandar. All right. So I want to see your answers now on WhatsApp, and I'm giving you exactly 37 minutes. We see whether you are a ninja that knows how to have a slow animal. Ni ninja ina gani? Black belt. Wewe ninja aina gani? Wewe ninja aina gani? Exam situation, take this very seriously. If you have an exam, another class at 4, of course, you must attend that class. That's all right. But when you get time in the evening, ask yourself, within the 37 minutes, within these 37 minutes, what would have I done in this question? 37. Because what I know, most students in this case, they start taking like 1.5 hours in one question, and then you keep on failing. You keep on blaming your village witches. And they're not that strong. They're never strong. Why are they not rich? They're never strong. Pandar, we talked Pandar. And the control F. Control F, utafute Pandar. Utaipata mara moja hata Pandar. Question number 35. Let me just share this again. Ama ninja wataki kuchoka ama ninja. Ukisema tu control F, utafute jina Pandar. Inakuja yenyewe tu. P-A-N-D-A-R. Pandar. Control F. Naipata hapo. So page number, for those ninjas that don't want to get tired, in page number 38. Page number 38, like that. Do we have any few students who are in this class who are free that I could use to really test that concept of 37 minutes? Do we have anybody in class who is free that will take, like, say, a break of, say, 10 minutes, and then they come back and hammer this question within 37 minutes we see, and then put some time? Put some timer. We have some ninjas who are free now. We're going to see within 37 minutes what I'm nini. All right. So please have taken in your names, Salangwa, Mpinda, Yanansi. I want to see morning class here. We are free. Yes. Thank you so much. So please go ahead and do what here. Just time yourself. Usiende kuanza CB to kishindo, so what? Whatever you write, just send it to our WhatsApp group. Bila uoga, hakuna unaogopa nini? Unaogopa nini? Unaogopa nini? Mkikiwa anasema kwamba ukiamua kuswim lazima utoe nguo zote. Kuna tunaogopa. Alright? So in this case tuonyesha kabisa hii kitu sijui. You just take 37 minutes, once imefika, piga picha tuma. Piga picha tuma. Thank you so much. See you later in the evening today. Today I happen to be having